Hey guys, it's Simon. Want to do a quick preview for this coming Monday. I want to give everyone a bigger picture. I anticipate being delayed in the morning. I'm going to try to be on time, but I just know on days when my daughter's out of school that things don't go as smoothly as I want them to. And it is a federal holiday. Also, I will not be here all day. I plan to cut out relatively early in the day. And so that's that. So I want to go over a couple of points that I think are important in the bigger picture of things. So the first one is um, there's a couple of 50-60s I would like everyone to make note of. And so these are the 50-60s that are notable. So from the swing low to the current swing high, the current 50-60 sits right here at 1936, essentially 1937 to and 1920. 1950 is a important area, uh, and I would expect responsive buyers there in 1936. But obviously, that's almost close to 100 points down from where we're at. Unlikely that we're going to get there, right? The other important areas is this right here. This is the top of an open window. There's an open gap sitting right here in front of the 50% retrace. So I would expect obviously a response off the front of the off the touch of the open gap. If we were to get down there again, 1942, 2006, something incredible is going to happen in order to make that happen. I don't anticipate that. There's no open gaps from below until we get down to this 1942, which is two things. First of all, the market likes to come back and close gaps, but if it's too far away, it can't build the energy to get there. So I don't anticipate a quick re-entry into that area. And so I'm not too worried about these lower levels. I wanted to point them out. The 50-60 that I am interested in is when we gap and go and kind of break out like this, usually the 50 retrace from this gap will get retested. If we look, that 50 retrace is sitting right here, and that puts us down at 1984 and 1977. So I expect somewhere in this area for there to be responsive buyers first time in. Clearly there's structure here, and I believe I have a support zone just in front of this particular structure. So again, I think 1986, let me look here real quick. Coming in, let's see, 1984 and a quarter to 1982 and a quarter. And the 50-60 is coming in right in at 1983.78. So that zone lines up right with the 50-60. You should make a note on your charts that that's also a potential 50-60 retest area. And it's also from the high would be roughly a 20 to 26 point rotation down. I expect responsive buyers the first time there, unless we gap below that. Okay, that's really my notes on the downside. I do expect responsive buyers first time to this 1977. That would be 30 points down. I really expect this at worst to be our low going into Monday. Also consider that bond market will be closed. It's kind of hard to generate enough momentum either way when you have a large part of the institutional players missing. So let's go and look above here real quick and see what we have that's up above that is important. So let's get rid of this. And one other thing that I would draw is I have a trend line going here, and clearly start right here. That trend line, which also lines up perfectly into that 1980, this trend line has to be broken before there's any consideration of rotation lower. And also, if you'll notice, the other thing I've put in is below that 1980, from here, really right down to 1950, very poorly auctioned. We go from unauctioned in this area to very poorly auctioned down to 1919, two separate areas. I'd have that in your notes again. Not a threat going into Monday, I don't think, unless something exceptional happens. When we look on the upside, so this, hit the upside, we obviously have the last Fed peak, which was here at 2011.50. we rejected from that Fed peak, just drop over, well, just right at it on Monday. When we look behind what's at that Friday, what's behind that Fed peak, we have an open gap sitting right here at 1915 and a quarter. Everything above 19, everything up to 2032 is poorly auctioned. I do expect there to be responsive sellers first time into this 2029 up to 2032 trade location. Also 2020 first time into here, even though it's poorly auctioned. If we look back a little bit further, that was a significant area, and I would expect that would be my immediate upside target. I'd expect 2020 to get tagged still and find some responsive sellers there the first time in. It is important to note on your 5-minute chart, everything from 2032 down is poorly auctioned. Above 2032 is relatively it's relatively well auctioned. I'd expect more response. We all know the dangers when we're in a poorly auctioned area. If you don't send me an email, I will attempt to address them. Lastly, when we look at this on a bigger picture on the upside, obviously, first of all, there's an uptrend intact, and as long as that uptrend is intact, I would respect the upside. Also, quite possible that the nature of the market has changed. I'm not certain of that yet, but I want to watch for an increase in volatility or continued decrease in volatility, decrease in range that we've had over the last couple of days as more certainty enters the market. And as more certainty enters the market, that 20 to 25 down will be my killer zone. I will be ready to strike in that area when we're down 20 to 25. If the old environment is the new environment, 20 to 25 is where I'm looking to make my killer moves and strike at the heart of fear and get those moves to the upside, and a little bit less aggressive on the short side trade, more interested in pushing the long side. And I'm not certain that's the case. I'm just still in the middle of reading if that is the case. It's been really challenging to flip for as fast as the market has been rotating. And then finally, when we look at this on a really big picture, I'm talking about 60 minutes here. Let's get rid of all the blinds here. When we go back and look, right, see where this whole support level came in. I'm going to push this up. See, this is all old support right here. See that 2026 to 2040? Those were extreme points, right? And then that 24, there's kind of broken in half. Really, it's everything from 2026 to 2025. This whole 25-point range was critical. If we go back and look at how it traded, all right, when we came up into it, you can see we made some attempts, but this was significant resistance, this 26 to 39 area before we rejected back down. Again, this is all bigger picture stuff, right? And then once we got above it, this was consistently, this 2026 to 2050 area was consistently support. You can see throughout here. So I would expect to have the opposite effect when we get up here. And I would look on stretches for location for shorts out of this area once we work our way up into that area, but we're not quite there yet. That's the bigger picture going into Monday. If I'm late, we've now done essentially the bigger picture preview, and we can just concentrate on the immediacy of where we're opening and what the immediate areas of support and resistance are above and below. So I've tried to be brief. I'd love feedback if this helps, doesn't help. I'm going to try to be as brief as I can every day. It seems to be getting a much more positive response. So I'm looking for continued upside until I see that trend line below break, right, and break definitively. And again, a lot of room to get responsive buyers back up. And apparently whatever was driving us in that bearish mode is gone now. I don't care what the reason was. It just seems like that reason is gone. Not that we can't pull down, but I do expect the downside to definitely kind of have this kind of quality to it where we, if we do move down, we move down in a pattern like this instead of like this. So that's my 2 cents, guys. I hope everyone has a wonderful weekend. I will see you all for the first 2 hours of trade on Monday morning. Have a great weekend. And again, thank you all of y'all for making part of this adventure. I really enjoy coaching y'all and seeing so many of y'all become successful traders. Really rewarding, guys. Talk to you later.